think the biggest challenge that are going to face captives, particularly reinsurance captives, is going to be in the area of fronting. And the reason that I say that is fronting by many is viewed as just issuing an insurance policy and passing the risk back to a captive. It's much more complicated than that, and it's becoming a much more sophisticated business than it ever has before. Why do I say that? Regulatory environments are becoming much stricter. Insurance companies like ours are under greater regulatory review around the world. And that's driving more complexity and more difficulty in the ability to provide fronting services. The next part of fronting, when you think about it, it's actually mostly for large multinational programs. It's a very complicated cash management system, and most people don't think about it that way. You're taking a number of insurance policies in multiple countries around the world in many different currencies, and you're trying to move that money as quickly and as efficiently through the system back into the captive. It's actually a pretty complicated process, and then you need to do it back the other way when there are claims. The money has to come out of the captive and through to the insurance company and then reimburse the insured. So there's a lot of complicated money movement that's involved in making sure that it works from an operational process. I think though the single biggest challenge that captives are going to be facing going forward, whether it be fronted or not, but primarily in fronted programs, is around collateral. And the reason that I say that is because collateral is now becoming an issue that people are thinking about much more than ever before. And there are three reasons that companies like ours require collateral. It used to just be for what I call economic reasons, which is because we're concerned about the level of credit risk that we're taking to our counterparty. And that still exists, but that's only one reason that we require collateral. Often we need it for regulatory reasons, and more sophisticated captives owners are recognizing the regulatory environment that requires us to post this type of collateral. The most, I'll call it famous, is Schedule F in the United States. But there are other countries as well that have regulatory requirements where we're required to post collateral when we deal with non-admitted reinsurance companies, or else we can take a significant capital charge. But lastly is what's evolving is the effect of non-admitted reinsurance on the ratings of insurance companies. Non-admitted reinsurance can have a very detrimental impact on the ratings of insurance companies. And as a result, we're becoming much more sensitive to this, and we're looking to require collateral from our clients in order to help mitigate this charge. Typically, in a normal fronting fee, we'll charge for the credit exposure, the cost of issuing policies, the administration of doing the deal. But historically, we have not charged for this potential capital hit. And now insurance companies are waking up to this very large potential cost. And I think that's going to ripple through down to captives. In addition, with the consolidation of the banking sector, there are fewer large banks available to provide letters of credit. And that means that there's greater concentration risk in companies like ours that have towards banks. And it will make it harder for us to be able to accept collateral from banks because we may reach our concentration limits. And it can prove to be an awkward situation when a company has a long-standing relationship with their bank and we're in the position of having to tell them we've already reached our concentration limit on that bank, we need to get a letter of credit from someone else. Not a conversation we're looking to have. We're looking to develop a number of techniques to be able to mitigate that. But as the banking sector concentrates, this is going to become more of a risk.